With CPI data dropping in a few hours, we thought we'd share our expectations of how the inflation numbers will affect Bitcoin and have a look at a bullish news story that seems to be flying under the radar. CPI data was released today, so expect volatility in the market. For Bitcoin, we're not anticipating any major moves as long as inflation is in or around the 3.1% expected range. If year-on-year inflation comes in at 3.1% or close to that, we think that Bitcoin continues in its current range between 29.5 and 31.5. If inflation year-on-year is dramatically higher than 3.1%, say about 4% plus, then we think that Bitcoin makes an immediate test of the range low support at 29.5k. But given the ETF demands, I don't think that this support is going to break. The only way that I see us breaking down, probably towards this lower trend line, is if inflation is so high that we see a 50 or 75 basis point interest rate hike being put onto the table. It's possible, but I think that would require almost double-digit inflation numbers to come in. If inflation year on year is dramatically less than the expected percentage, say about 2.5% and down, then I think we'll see Bitcoin break out of its current range and go well into the mid-30s. In short, we're not expecting much from the inflation data drop outside of some market volatility unless estimates are way off and the market panics in response. Remember when all the FUD surrounding Bitcoin revolved around the environmental impact of Bitcoin mining? Well, that's no longer an issue as the institutions who launched the applications for spot ETFs are looking to acquire stakes in mining firms, likely as a way to control the supply of Bitcoin into their funds. Vanguard, for example, just took a 10% stake in Bitcoin mining firm Riot Platforms. Jack Dorsey, formerly of Twitter, also plans to launch a Bitcoin hardware, software and infrastructure mining firm through his business Block in 2024. Over 92.5% of all Bitcoin that will ever exist has already been mined, meaning that only 7.5% of Bitcoin supply is left. We covered in a video last week about the massive disparity currently between the low Bitcoin supply and the very high demand that we're seeing, and this gap's only going to increase if the market rises and miners stop moving 100% of their mined Bitcoin straight to the market. It looks as though the big institutional investors are looking to secure their access to mine Bitcoin through this move. Standard Chartered Bank have forecast that the supply crunch will push Bitcoin price to 120k in 2024, and Bitcoin mining stocks have increased between 280 and 420% since the start of last year. So remember, if later today we see any FUD around the CPI data, the Bitcoin's future is incredibly bullish. Join our free Discord, link down below to get all our trading signals and analysis for free, and comment below to let us know what you think, and don't forget to like the video if it was of any use. Thanks.